Hi, Financial Reporting Council regulates the corporate reporting in every country and recently issued out a report and review for the year. How does this concern affect you as student of accounting and accountancy and somebody that wants to do something with accounting? If you understand these top 10 areas that are currently issues in the corporate reporting world and you tailor your areas of understanding towards it, is very possible to get higher marks. That is one thing. And having known the importance of why corporate reporting is what it is to us, which was in my first video, then we understand why corporate reporting as a subject must not be taken lightly. Having said that, the first one was impairment of assets. And what do you need to know and do with this? IAS 36 actually governs this aspect of corporate reporting, and you need to understand what impairment really is. What is impairment? Loss or losses, the recoverable amount you need to understand, cash generating unit, pardon me, you need to understand what it is. Impairment testing, you must be very sound in it. Measurement of impairment, you must be good at it. Reversal of impairment, you must be good at it. And also the presentation and disclosure requirements that are expected of you. If you are able to achieve this, that aspect is covered. Then they spoke about cash flow statements, that organizations are not really doing too good in it, and it becomes a center of concentration for you. And what do you need to understand about cash flow, especially because students of accounting generally don't really like cash flow statement, but we need to understand it. So you need to understand that it's regulated by IAS 7. Please digest that. Then the structure of cash flow statements, the operating cash, you need to know about the investing structure aspect of it. I will leave the last one for you to research on. Then the presentation and the disclosure requirements of IAS 7. You need to understand it very well to do well in these aspects. Then financial instruments, the definition of financial instruments, you need to understand classification of financial instruments, the presentation requirements also, and the disclosure, you need to understand it. Revenue, that is the engine room of every company. What is revenue and what is revenue recognition criteria? You need to understand the revenue measurement and revenue disclosure. I'm moving fast because of time. I don't want it to be too long. We are going to go now into presentation of financial statements, and IAS 1. At least if there is anyone among us that is just starting, remember IAS 1 is all about financial statement presentation. And this is actually crucial as a knowledge area that you need to understand, because it actually penetrated into every fiber of financial statements. No doubt about it. So you need to understand the components of financial statements. The key requirements of going concern, comparability, materiality, ACCRUAL, they are very important. There we talk about understanding the disclosure requirements under IAS 1, like accounting policies. You need to understand capital structure, financial risk, judgment, and estimate. Meanwhile, judgment and estimate actually is going into other fibers of IAS or IASs. So you are going to see it all along the line. Having said that, for those that are just joining us as we move into strategic reports, this is Benga Olatunji, FCA from GGEMS Associates. One thing you can do for us, if as at this moment you've enjoyed value and you will yet enjoy throughout the end of this video, I can guarantee you, first of all, like so that the algorithm can help us, then share to a friend and comment and reach out to us when need be. Having said that, what is strategic report and what does it have to do in corporate reporting understanding? When we are talking about strategic report, we are talking about aspects of the financial statements that discusses about business model. Many organizations actually failed because they did not have strong strategic model. So strategic model must be discussed under strategic reports. The market review, the review of performance, the governance of risk management, adherence to governance must be stated clearly. CEO statement must be clear about SCR, which we call social responsibility, corporate social responsibility, pardon me. Then the financial review, all these are entailed under strategic reports. So what I'm trying to say is that companies, shareholders with a holistic and meaningful picture of companies must be presented to them by the CEO and the management using what strategic reports, which we show the shareholders and every stakeholder generally what the risk factors in the business really are, and strategies that they are using, the development strategies, the sales strategy, the marketing strategy, the performance of the board, the performance of the management, the performance, especially financial performance of the organization, and the future prospects and how they believe the organization can actually achieve this must be stated under this category in the financial statements. Then we'll talk about judgment and estimates. If you remember, under IAS 1, I preempted that we are going to have accounting policies and so many other things to do with IAS 1 about presentation. So these are actually interwoven, but here under IAS 8 judgment and estimate, it actually talk more about accounting policies, change in accounting policies and how to implement it, the estimates and how to correct and amend errors, and the consistency of our estimates and judgments, the applicability, practical applicability of our judgment, because it's not good alone that we just give estimates and put it. Let's say, for example, provision for bad debt and the like is an estimate, right? We must have consistency. We must be consistent in whatsoever method that we are using, like depreciation method, the straight line method of depreciation and the like. We must be consistent if we want to use reducing balance, we must be consistent with it, and that is what we have under IAS 8, which is very crucial you understand as students of corporate reporting. Having said that, then we move on to income tax. Income tax is governed by IAS 12, and under IAS 12 you are expected to understand definition of income tax. You need to understand what current tax means, what deferred tax means, the temporal or temporary difference. What does that mean? The taxable profits and how to calculate it. You need to understand the deferred tax liability and how to calculate deferred tax liability, among so many other things that you need to understand. One aspect that is featuring now is about fair value measurement, and IFRS 13 actually governs this. You see that I've been talking about IASs, IAS and IFRSs. They are the body of governing rule and books of accounting regulations that we must adhere to. Now, let's quickly talk about IFRS 13, which guides us about fair value measurement. You need to understand what fair value actually really is and fair value measurement. You need to understand its definition, the measurement framework. You need to understand valuation under fair value measurement. You need to understand valuation approaches like that of cost approach, the income approach. The last but not the least is what? Put it in the comments. Okay, let's go on. Market approach. You need to understand it. For valuation technique too, you need to understand it. And when we are talking about valuation technique, for example, you need to understand discounting cash flow valuation technique. You need to understand fair value. You need to understand the hierarchical value of fair valuation, among so many other things. Last but not the least is the climate change reporting, climate related reporting, SDG reporting, ozone layer reporting, and general environmental impacts and footprints in accounting. I think a live video as regards that. So these are the things that we need to understand, brought to you by Benga Olatunji FCA from G. James Associate. Don't forget to like and subscribe to G. James Associate. We pride ourselves that we are value to life, we are value to your businesses, and if you need accountants, you want to do accounting, maybe prepare your book of accounting records, maybe you want to do auditing, or you need an aspect of management discussion, you want your staff to understand and get ready for the future of your organization, you can involve us. The description below actually will do justice to that, and we'll expect your call and contact. Having said that, let's quickly review what we have said and why this video is important to you as students of ACCA, as student of ICANN, as student of ICAEW, that is England and Wales, or that of Nigeria, or that of US. You need to understand that corporate reporting is important because it positions the organization you are employed or serving or we work with to be able to access capital. And to access capital, the Investors must be able to rely on whatsoever information provided using our corporate reporting. So it is a primary knowledge for us. And having said that, there are current issues in the market in accounting field governed by Federal Reporting Council, which we call FRC. And because of these issues, we are preempting that institutions of learning and professional accounting bodies going forward, we want to make sure that students that are passing through the institutes are strong around these areas of issues observed by the Federal Reporting Council. And having said that, they came out recently with 10 issues. What are they? They are listed on the board for us. The impairment of assets, cash flow statement issue, income tax statement, presentation of financial statements, revenue issues, disclosure of revenue, fair value measurements. These are some of the issues, and once you have this and you are able to tailor your corporate reporting reading towards everything that I've said before, I can almost guarantee your passage. Benga Olatunji FCA, we are value to life. We are value to your businesses.